Hi, everyone. Good morning again. And very excited to be here on the second session for today. So, in the previous session, we showed you guys some of the new developments. And today, we're going to spend more time on Trendspider. Very excited about this integration. But first of all, I want to welcome you, Anne-Marie. Glad to have you again. It's always a pleasure when we are in a live together. And thank you for being here.
I am looking forward to our time together. I am so excited about this Trendspider edition. As a lot of folks know that might watch me, I use Trendspider almost exclusively in my charting online, and this is absolutely fantastic.
Yeah, and we are very excited because I think not only you can have the levels easily on the chart, but you can also leverage the power of the platform, which is awesome. So I think just to introduce what we're going to talk about today. So why are we calling this session Finding the Edge? Because basically we want to help traders that are struggling of being profitable. They're struggling because there's too much information, that are struggling because there's too much volatility. We don't know how to react and we are just losing money, right? So I'm partnering together with you, Anne-Marie, because of course you've been in the business for about 25 plus years. And of course, you've seen it all since the 2001 credit crisis, the 2007 credit crisis, COVID. And now, of course, we now have this volatility that we've seen the last couple of months. And especially new traders are really struggling with this. So we want to help you guys potentially find value, find an edge. And now can you actually use data to help you build a solid plan? So the first question I have for you, Anne-Marie, of course, you've been through different cycles, but I think in the last 5 years since COVID, a lot of things have changed and we've seen really a structural change. So how did you approach this new, behavior? Of course, you probably weren't using option data before, but obviously now it's kind of part of your now new routine. And obviously we've met about 2 years ago through Twitter. And then of course we became friends, we became partners, but really want to understand how you shifted that mindset that you had before, and now you were able to adapt to what's changing in the market?
That's a great question. And I think it's a hard one to answer simply because it took so much for me to say, wait a second, what aren't you looking at? And so, once zero DTEs came online, we really got to see how the options market began to actually force the flow of the equities. And so now we call it the tail wagging the dog. And we see that primarily in everything. So before MenthorQ, and still to somewhat where the platform is not integrated with MenthorQ, I actually had to go calculate my implied probabilities from the chains every morning to see what was going on. And that gets very cumbersome, especially if you're looking at a few different markets. And so the biggest change that I made was, wait a second, you need to look at what the options market is doing, realize that this information is really what investment managers that are actively trading are looking at, and then leveraging what we are seeing that they are seeing that gives us an edge. And what's really exciting, Fabio, is I just read a couple of articles that said the retail investor, which has normally been called the dumb money, is leveraging these tech tools that never used to be available to them, like MenthorQ, and really learning to position themselves in a way that makes sense. And if they are moving cohesively together, it turns into $1 billion of flow, making retail traders really a force to be reckoned with. So to me, that's very exciting, especially as they are showing ETF flows moved into the market way faster at the bottom of this last cycle in April, and have really managed the ebb and peak know the market really, really well relative to the investment advisor, which is really kind of, that's like trying to change course for a battleship, and we are sitting in our little zodiac boats, being able to zoom around in the market. And so that's what's made me very keen on really making sure I help get these tools out to the folks that really can use it, and then put it in a framework that sits inside of a strategy. Fabio and I were talking back in the green screen a little bit ago, and we were talking about how to use these GEX levels. And Fabio said, hey, listen, it's just an area that you need to observe, but not so much position against or into until price action tells you that that's appropriate. And that happened this morning in the ES really dramatically as it came into the call resistance edge. But look at how many hours it took to resolve lower. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 hours before it began to break down and travel through the downward flow. And so the question might be, if I'm not up in the middle of the night, is there a way that I can trade that with appropriate risk? And then if I position there, where is my target? And you can see that we are coming down into, that's a high volume node that's marked there, and it's 5904. And so literally these GEX levels have trapped us between the ceiling and the floor as it sits right now. So,
and
yeah,
if you like, what I think it's important for, because we get a lot of questions about, I don't trade options, it's too complicated, I don't understand them. But if you hide, for example, for a second, Anne-Marie, the levels for just for a moment. So if you hide the indicator, like, let's just look at the power of this information, right? So if we look at the first candle where we had the big push to the upside before the price kind of like stopped at the 6,000 level, right? Mm-hmm. If you're simply relying on technical analysis and past price action, where is your stop? Where is your stop? Where does the market? So it looks like you were in a very, very strong bullish trend. So you could have said, okay, the market is going to go up, I'm just going to go long. But in reality, like, we put the level back and you now have a strong area there at 6,000 that is coming from large positioning in the option market. So if you didn't have that level on your chart, you could have thought that the market could have just gone up because maybe we were in a bullish market. There was maybe news this morning, Nvidia reported yesterday. So of course, there's a lot of like pieces of the puzzle, but obviously knowing that area could have told you, okay, let's see if the price action reacts past this area, and then we could potentially plan our trade. But if we would have gone just blind, then of course you would have been chopped out for many, many hours without knowing where the price action could have been.
That's exactly right. That's exactly right. So let's build, we can look at these levels and we can say, hey, the playing devil's advocate, the trader might say, well, let's move that to the top. The trader might say, well, here are some levels right here. How would I be looking at those things? And you might notice that I am sitting on a 1 hour chart. I love the 1 hour. It is pure magic to me. And for those of you that know me, you know that I use that 1 hour Globex open to sort of strategize what's going to be going on in the marketplace. And so let's sort of converge what we have in basic strategy to say, okay, where might my targets be and what might I want to look for? And so let's just, here's the first thing that I like to add to this formation. We will notice that the highest volume candlestick for yesterday on the 1 hour did not occur at the open with 9 to 10. In fact, it occurs from 3 to 4. Now, why it occurs from 3 or 4, we don't know, but we also don't care, right? But what we want to do is make sure that we know that we've got our eyes on that box. So for me, I'm going to be looking for gamma lines that show maybe I've got a bounce off of this area, or maybe I've got a continuation. Now, let's use some common sense. That's a bearish candlestick, and it's got the most flow of the entire day. And what it does is price action in the following candlestick, which we know in hindsight came from that court that said, hey, all the Trump tariffs are unconstitutional, or whatever they were saying. And so that somebody got wind of it early. They started moving into the market. It started bleeding out, and then off to the races. Here's one reason why price action was so savagely upward. If the largest volume candlestick of the day is negative, we can assume that there were more sellers than buyers, and they were hoping to break the moving average. This is the only indicator I have on here. It is the 63 simple moving average. And some people go, 63? What is that all about? A lot of investment houses use the 63. And so I have stopped using the 50, and now I just use the 63 in combination with my gamma lines from MenthorQ. So what we notice is the collapse of the region. It moves down through the lines and then straight back up. So in your mind, you might say, oh, wow, I should sell this bounce. And so perhaps a lot of people did. But here's the thing. If you get to the high of a negative candlestick and price action breaks above it, your brain should say, uh-oh, that's short covering, and I need to start staring down my higher gamma lines as potential targets. So stay with the trend until the trend stops being a trend. And so if we go to a 5-minute and we take a look at that motion, take a look at what happens, how cleanly our gamma lines can keep us in the trade. Now, this is a very big moving average. So for me, I can't look at it and go, oh, I'm buying the dip. Without these gamma lines, I can't go, oh, I'm buying the dip, because my risk becomes outsized because it's still the top of that range that I'm supposed to be looking for. And so when you stair step and it moves up and the 5-minute holds, and it moves up and the 5-minute holds, all you should be doing is raising your stop to the gamma lines just below it, and just walk the trade up and look at what happens on the 5-minute. It gets finally into the call wall. It's still pulling back for higher lows. Your stop should now be that 59.75, but it's also a number you have to keep in your head, because we just had a savage short covering move. And so if it is short covering, remember, that's buying the market to get out of the market, not buying the market to stay in the market. So the amount of upward thrust that a chart has really begins to shift in something that's a short covering if they lose the level. Now, here it is. It comes into the 5-minute and it starts moving sideways. So this to me is breaking a trend by time and not price. Two things are going to happen. One, it's going to break through call resistance, or two, it's going to break below call resistance and end up giving you downward flow. For me, because I use the 65, once it begins to flatten, I say to myself, you know what? I've got this flat moving average here. I'm going to see how far it bounces above that area. That's my call resistance. I'm going to wait for it to break, lose my moving average, and then on the failed bounce, I'm going to get in. So here it is, breaks the moving average, loses the moving average, and fails to break down. So for me, I could potentially get short at 59.86. That being said, my stop has to be above the high wick of the day. And notice they come right in and they take it out. If you said, hey, I'm short here, they come in, they maybe take 3-4 points ahead and then rotate over. That happens. And so your first thought with a sideways pressure event should really be, can I, after I've made a low, can I break up and then lose that important call resistance again and end up under the market? You could get chopped up right in here if you, let's say you took too much size, or let's say you're tight, your stop was too tight, or let's say it was wide, but they came and got you, which is all things that happen. Here's the biggest thing about trading. When you trade, you can be right, you can be wrong. That's it. And once you get in, you have to say, all right, if I get stopped out, two things could be the case. One, my timing's off, or two, my thought process about future motion is off. So for me, because I felt this was a short squeeze, again, because of the big candlestick of downside motion, I was looking for the market to fail up here at the call resistance. And so essentially, any place along the front line break gives me my short with a wider stop. So if I take the short there, what I want to do is add into the position as it fails, because now I'm under call resistance. My premise of the short covering is very likely in confirmation, and I can stair step into my next gamma lines. And so, oops, I don't know what I did with that. Should have locked it. So this gives me my opening range. It's just how I set up my trade. So for me, this short action opens up very nicely, and all I have to do on my 5-minute is say, all right, am I still making lower highs and lower lows? High, low, lower high, lower low, lower high, lower low, lower high. And as long as I do not break above those Gex lines, I am going to move down into the call wall. And as long as I still make lower highs and lower lows, I'm going to walk to the bottom of my opening candlestick formation on the 1 hour. So the key to success, and I need to lock this if you don't mind. Hang on. Lock. So the key to success in my mind about using the gamma lines is make sure your trend is moving in play, and then look at where the high volume candlestick for the prior day is breaking the formation. Whether it continues down, we know that all those shorts are very happy and they're going to walk down into these next lines here, or they break out and they're scrambling to cover because they're flat-footed. So in this particular case, now our target levels, my first target level would be the low of my 1 hour candlestick formation, But notice how, and this is very interesting, this happens very often. When I get a drawing for a 1 hour highest volume candle of the day, I am going to end up seeing high volume nodes and gamma lines. It is extraordinary how those two pieces work together. Absolutely love them. So what we know is that there's a potential floor beneath us. So the question is, again, where are the best places to get involved in these trades? And my thought is always wait for the gamma line, collapse into your 5-minute, and then watch the formation tell you you are in the right direction. Let's say you didn't stare at the market until 7 o'clock last night and you were trying to trade this. Easily, you could use your lines, which come out the prior day at the close of the day. You can use your lines and go, okay, here's 7 o'clock. What's my trend? Up, right? Am I above the candlestick formations that tell me I'm an upside pressure event? Yes. Did I just break the call resistance line for the 0 DTEs? Yes. Well, does that mean I go short? Let the candlestick tell you. If you blow right through it, and then the next candlestick opens up and there's no wick, you can chase it. Your stop will be underneath that call resistance wall, sitting right there for you, and you can simply walk it up. If you're the type of person that goes, hey, I don't want to use a 5-minute, I want to use a 2-minute, doesn't matter. You can use whatever you want to. Just remember, the trend is going to tell you how strong the move is. The gamma lines will tell you where the stair steps are, and your ability to hop in and manage your risk comes from how you assess those candlestick formations. And literally, if you're making higher lows and higher highs through every single one of them, I mean, look at these candlesticks. They are incredibly bullish. We're very afraid to buy candlesticks that look like this. And the question is, why? I'd be afraid to buy a candlestick here because it's not telling me anything's moving in a direction or not. But when it starts doing this, you're in great shape. And that's how you can use these lines. Don't look at the chart and say, okay, I see my MenthorQ line is here and I missed that low from the high volume node for the 0 DTE. So now it must be a short. So now I've got to short it. Why? If it's moving straight up, shorting is a bad idea, right? I don't like looking at tight time frames because they confuse me. I'm like a Cocker Spaniel in terms of attention. And so I fall very far out of focus when I can't actively look at something from a longer time frame so I can go, I see what's happening. I see that these short sellers potentially are going to want to reshort, but the buyers that threw them off course, maybe they're looking for some kind of double top. And I'm sitting between some very important levels. So guess what? There's no harm in doing nothing and waiting for price to come to you. So as we continue for whatever part of the day, let's say you leave this presentation and you go about your day. If you're thinking about, well, I wonder what she's going to do, I'm going to be looking for buy zones at around 58.93. I'm going to wait for them to present, and I'm going to wait for the buyers to get involved, and then I'm going to take the trade to the north. I might move into a 15-minute candlestick formation if if I feel that that's appropriate. Let's take a look at the NQ. Do you want to? Would that be okay, Fabio?
Yeah, I think I have a couple of good examples if you wanna
Sure.
if we look at Nvidia and
Sure.
if we of course Nvidia yesterday had like big news, and if you switch,
Mhm.
if you go in the indicator and you switch the end of day levels to the intraday, I think it's going to be very interesting to see. So so it's very easy to do that with Trendspider. It's all through API,
Gorgeous.
and if you I think if you change to a 5 minutes time frame.
Wow.
So let's say that Nvidia opened higher, so there was a gap between the close of yesterday and the opening of today. But let's say you wanted to get involved, right? And as you can see, the price opens high, but then comes down, right? And where does it stop? At the 1 day minimum for the day. So
Mm-hmm.
again, if you were short, that could have been your target. If you wanted to get in, that could have been a nice entry point, and see how much for 20, 30 minutes, it basically stores right there. And then now I don't know what's going to happen at the end of the day, of course, but that could have been a nice entry point as well on NVIDIA. So
Excellent. So let's talk a little bit more about this. Let's talk about how it might look if indeed this resistance wall becomes the floor, right? So what we first saw is that savage fade down. And if you're like me and you like to draw these sorts of things that map the first hour of trading, whatever it happens to be, right? So this is the opening range. It moved up, and look, this is absolutely gorgeous. Of course, I look for the hourly, and if I see the gamma line there, my thought is I want to know if there's power to push above it, or I want to know if it's a reversion, right? And so I see the call wall here. I see resistance. I see the 1 day minimum. I'm going to be thinking to myself, okay, here is the level 2. I need to see if I can get short on the bounce here. And then my first target, of course, is going to be my opening candlestick low to go through the opening range. But my second target is going to be the call resistance. My third target is not until all the way down here at a high volume node for the 0 DTEs. So this is going to be my range. Now, I suspect that NVIDIA will fade, but it might not be today. But easily, if you stare down that hourly, you can go, okay, it's testing there. Let me see if I can get a failed retest, because obviously I'm making lower lows. Let me see if I can come in and make another failed test on the high, and then I can take the short. If per happenstance you're very bullish on NVIDIA, you could have been waiting at the call resistance breakout because it was sitting right there for you, and it really rocketed right off the edge. So you might go, well, gosh, how can I trade that? Well, you've got to have a strategy that says, I'm bullish NVIDIA today. I see the 1 day minimum. I'm going to try and take that trade. So I've got a 2-minute chart up there. And so here's how you use these walls combined with price action to tell you can move in the right direction. First thing that happens is you fail to head lower. So it comes in and it hits that 1 day minimum. And your thoughts got to be, okay, it only lost it by about 15 cents. And now it's running away from you. Your thought should be, okay, what's the overall trend here? High, low, lower high, lower low. If it bounces, physics suggest that the downward pressure is going to find more sellers until it stops heading lower. So literally, very patiently, you can see this happen and say, you know what? I'm going to put a limit order out here at 139.50. And my goal, if you're using my formations, the goal is going to be, can I first get to the bottom of the opening range, and then can I get to the top? And I would walk it that way as long as I could. But that's how you look for price action to tell you that these gamma lines are going to hold. The beauty of it is that they always will tell you something. The way we have problems using this is that we jump the gun and we anticipate ahead of time what we think it's going to do, instead of using the data that says, how about we know what they're trying to do there? Let's see if they win, or let's see if they lose. And if they lose, you can chase it all the way down, because very often that's some sort of huge market move, sort of like, maybe the Qs will tell us, huh? Sort of like what happened with the Qs. Let me delete these drawings. When it broke out above the range post-market and started really moving fantastically into what? The one-day maximum. Literally, that's where it stops almost at 430. And so your thought should always be, have I isolated where high volume is? Do I think about what that means if all that volume is sitting in the wrong direction? And if it's sitting in the wrong direction, what does that mean? And it means those traders are going to puke. It does. It means they're going to puke. And so the speed of how it moves tells us the likelihood that it's going to continue. The faster something moves, the more likely it is it's going to carry a distance event of higher magnitude, right? So this morning, again, my thought is, let's go back. And if there's anybody in the chat that says, hey, can you show me this trade using this whatever, right? So throw a ticker out. And
I think a very good example, Anne-Marie, was GC. I think it was also a very, very good one.
Oh, gold. Yeah. All right. So wow, you're not kidding. Look at that. And these things are just beautiful. I don't even know how I worked without them, really. They're just absolutely fantastic. All right, moving all our lines in the sand off. We've got gold. Look at it coming right into this line, right? So we've got a big fat cross current, right? We've got trend down. We're in a great big sideways range. And we have a lot of things going on in the bond market. We really, we have no idea what's here or what's important in general terms. So let's see where the highest volume event is. 9 a.m. this morning. That's fairly common for it to be the first hour of the day as opposed to the last hour of the day. And so you can see the traders sitting in there are really caught in the mud. They can't break lower. They do break lower. They try to lift and they can't break higher. But notice also we've got the 0 DTE high volume node, right? Sitting right there at the top of the range. You can see why the traders might have done something like that, right? Old resistance, new supports, old resistance, new resistance. But they're literally caught in here. So you as a trader should be saying to yourself, okay, wait a second. Either this is going to break out above this volume event, or we're going to move down and stay trapped in the zone. How do we tell? This might be a trade setting up right now. Let's go to the 5-minute. Right? Obviously, if you see it in a 5-minute, the price action tells us it's in mean reversion. So we are breaking trend by time and not price, meaning instead of going straight up, we're sort of meandering, not breaking the low, not breaking the high. So what's the trade? Now, this is a sticky one, simply because trend is usually master and commander, and we can see another gamma line at 33.48, and then even one higher above 33.60. What would I do? Ideally, I would love it if it came to old resistance, new support at about 33.29, and I would take a long there, and I would notice that my wicks are sitting sort of halfway through here. So my stop would be about 33.22. So I have about 7 points of risk, but I'm looking for a long because the trend is up. Now, let's say I'm wrong. I have 7 points of risk, right? So I might use a couple of micros rather than just minis. But I know what my risk is. It's clearly defined. If you say, well, I think it goes right back to the bottom here, you could take a short right here at 33.40. What would your stop be? It would have to be above this wick. That's 33.47 to 33, maybe 49. There's another gamma line above it. So it might be better to go, you know what? Let me put my short here at 33.45. And if it fills me, awesome. If it doesn't fill me, hey, another good trade is coming around the bend. And that's also an important. Fabio, I got to say, you have been so great to just let me yammer on. I have just capitalized all of the conversation completely, starting to feel pretty bad about that, I have to tell you.
No.
But
I love listening to you.
I absolutely love the way this tool gives people opportunities that give them true edge. And listen, a lot of times, I'll liken it to this. This is one of my husband's analogies. In the hands of a master craftsman, a skill saw will create a beautiful piece of furniture. In my hands, we're off to the emergency room with a gash wound somewhere. Mm-hmm. And what I want to say is that these tools are as powerful as that skill saw to carve up the market. The question is, do you develop the skill to use it appropriately? So Fabio and I are going to spend more times like this in the future, looking over these kinds of charts and working through mechanical flow and what we see in the market and that sort of thing. And so that's something that I want to urge each of you to really dig in and say, I'm going to learn how to master this. And I've spent a lot of time in the future space, but these things are incredible with stocks of all kinds. High liquidity, of course, is my favorite. Take a look again. Look at how beautifully Meta came up here. Now, listen, it's just shy of the wall. So don't get your knickers in a twist if you go, hey, I wanted to short it up there and it didn't come in. One, if you think about things like that, you're going to go, you know what? I'm going to chase trades, and you never want to do that. If it does not come into the line, your thought should be, I wonder what the traders are up to. I wonder what they're thinking. If there's price action that's not strong enough to get up to a gamma line that is very close, big fat round number, incidentally, what might it do? Well, I'll tell you what it might do. It might fall into the lower lines. And indeed, that's what it does. And so, again, I'll use my
And Anne-Marie, after I want to maybe share a couple of examples going into the dashboard on why the data can give you an edge as a trader. So it doesn't matter.
Perfect. Yeah, let's do that now.
Yeah, let me share.
Yeah, let's do that now. You can take that. Screen over if you like, but absolutely beautiful. I suspect easily that Meta comes into that 640 line where that most recent gamma line is positioning, and I think that'll be, a super interesting trade. All right, ready to go.
Basically, for those who have followed us, 2 months ago, we had a problem with a lot of our trades, and we started a very big partnership. And the feedback was, love what you do, but your data is overwhelming, and I don't understand how to find value, how to read it. It's very complicated. I'm not an option trader. So then what we did is, okay, let's actually try to simplify this data to the maximum. Let's make it as easy as possible. And what we've done is we've developed those values that you see right here. This is our Q score. The idea behind it is, think about as a rating agency or an analyst that is rating a company from bearish to bullish, normally 0 to 5. And basically the idea is really is this company a bullish company, a bearish company, and how has this changed over time? So our rating is based on 4 factors. Let's look at what the option data is telling us. So we have our option score, goes from 0 to 5. 5 is very bullish, 0 is very bearish. We have our volatility score, we have our momentum score, and we have our seasonality score. So now you see NVIDIA, clearly we are in a very strong uptrend, also given what happened yesterday with the earnings. But let's go back in the past, and let's go scroll down a little bit, and let's actually look at the historical data that you would have got during time, across time. So we go back 1 month ago, and suddenly we are at 0 option score. So 1 month ago, the market was in fear. NVIDIA dropped. Everybody was really bearish of the tariff situation. And then in a matter of a few days, the option score went from very bearish to very bullish. This is in a matter of 3 days. But if you are monitoring this as a trader, you could have got in right here. This was under 110, right? And we're now at over 130. So this would have been a 20-25% return, maybe in a matter of a few weeks, just by looking at what the big guys are doing and how the option chain is changing. So this,
love that. That's gold.
Yeah, and then you can do the same on Tesla, right? So if you look at Tesla, another stock that experienced a very, very strong move. I mean, take a look at this. We were basically super bearish, and went super bullish. We went from 240, 250, all the way to 350. That's like 35% move in a matter of a few weeks. And this is strong insights coming from the option market.
So may I ask a question right there?
Yeah.
At that very option score. So if I were looking at this right now, based on what the option score is showing on the extremes, would it be a fair place to take a look at a short
So
with
potentially,
defined risk?
So I don't want to, obviously it's not a recommendation or anything, but what you want to monitor is you want to monitor those big moves, right? So we went
Okay.
from a 0 to 4 in a
Mhm.
matter of 2 days. So now we were yesterday or the day before, we were 5, now we're dropping. So I think it's good to monitor what this value does. And on top of that, what we've developed is a screener based on the score. So let's imagine that you want to see, you want to look for short opportunities, right? So let's say that we want to see the highest decrease in option score versus the previous day. So now we can go into the screener and we can, for example, see that that Okta dropped 3 points compared to the previous days. So we saw a -3 change in option score. Norwegian dropped 3 points. So if you go then and look at it, we can open it up and we can see all the different models. So you're now in kind of like a neutral, but it was very bullish the previous day. And then here you can go and see the same chart right there. So, you know, this is how you would monitor kind of like this drop. Yeah.
Interesting.
Yeah. So just some ideas on how you can then leverage the data. Not only, of course, the levels in the chart are very important, but you can also do a much deeper analysis by looking at the models that we provide within the dashboard as well.
It's awesome. This has so much power. I mean, truly, we have got incredibly strong analysis, investment grade analysis at the tips of our fingers.
Mm-hmm.
It's really fantastic.
But also, like those scores were also very useful during the drop of February, March.
Mm-hmm.
So if we go back to, let's see if we can go back in time to March, but let's see, we can always go back in time here. So if we go back to maybe, so we go back to March, we were of course in a different war back then, but if we look at the model, again, let's look at option score. We went in a matter of 1 day in February from very bullish to very bearish. The market drops. We went again from very bullish to almost bearish. The market drops. We are in March right here. We're at the 29th of March. I also look at seasonality, right? So seasonality went from very bullish to very bearish. This kind of predicted this strong downtrend move right here. And then if you combine those, so you're looking at the option score, you're looking at seasonality, and then you're also looking at momentum. Okay, let's say you don't get in at the first move, but even if you get in maybe even 2-3 candles after, you're still basically capitalizing a very strong downtrend.
How would we use skew?
Skew, very interesting. So let's go back to NVIDIA and let's go back to today. So skew basically tells you it's built on out of the money options. So we're looking at the 25 delta option, both on the call side, and we're looking at how the market is pricing them, looking at volatility. And basically what you see here is that call options are more expensive than puts. So the market is willing to pay more for an upside risk than a downside risk. So the way you look at skew is, can it confirm my idea? Is the market willing to pay more for an upside move rather than a downside? And we're looking at out of the money options. So that means that we need a strong move for the market to capitalize on that. So the market is now bidding more on our 25 delta calls than our 25 delta puts, basically. And if we go back in time, we were on the opposite side. So when we look at Tesla in February, March, we were at the highest level of skew. And again, when we reach those maximum, that's when, you know, look at this, we reached the maximum for the past 3 months, and that's where the price goes rocket into the upside.
Yeah. Interesting. Thank you. Thank you.
Yeah. So it's it's additional tools that are very, very powerful. When you combine everything, then of course you go back to your chart and then you look at the levels directly to your chart, and then you can kind of trade with that.
Fantastic.
Yeah, let us know, guys, if you have questions. Is there anything you want us to cover? Any particular tickers? As I mentioned earlier, Anne-Marie, we are now covering Forex. So we now have gamma levels and blind spots on Forex. So it might not be the topic of this conversation, but just to let you guys know, we now have an additional tool for Forex traders as well.
Excellent.
Right, let's see. I don't see any questions. I don't know if you have any questions for me, Anne-Marie, or...
I don't. No, I don't, actually. I don't have any questions. I always, every time I'm on with you, I always learn something else the platform can do.
Yeah.
It's just so robust, literally. It's so robust.
So we have a question about integration. So let's go back to the dashboard. Are you integrated with thinkorswim? So if you come here to the left side, we have an integration section right there, and we do have thinkorswim indicator, but because of some limitation of the platform, so we don't have an API connection with thinkorswim, so the upload of the level is kind of manual, but we do have an indicator for thinkorswim for sure. Yes.
Well, that's fantastic. That's fantastic. I did not know that. That's great. That's great.
And then for those who are, of course, Trendspider, TradingView, you know, we have MotiveWave, we have, you know, Bookmap if you guys use order flow data. We have that, and of course, Ninja for futures trader, and Quantower and Atas. So we have a lot of those, and they're all available through API. And within TradingView, we auto update the levels, so you get the levels already updated throughout the day and at the end of the day.
You know what might be very interesting? The next time we are together, it might be great for us to pick an instrument, maybe something that's just reported, like Broadcom or you know, Tesla or whatever, and then we start with what the platform is telling us in general, and then we move to the levels, and so we can get through the flow of the trader coming into the morning going, okay, this is what I'm looking for. And maybe we start with a scan and then we just run through it all the way. I would love to do that.
Yeah, absolutely. That would be fun. And the goal, is to build basically a routine. So the idea of all what we do is really, you know, finance is complicated, but it doesn't have to be if you are able to kind of simplify it in a way that, you know, at the end of the day, all you need to understand is where the market is positioned, what is the liquidity, what's the volatility of my asset, what is my risk reward, and then how can I plan my trade. And you could be a day trader, you could be a swing trader, we've built models that can help you understand where the market would be with a high level of confidence.
What were the steps that you said just a second ago? You said it fell right out of my head because I'm a Cocker Spaniel, and I apologize. You said what?
So basically, I think we want to understand the positioning of the market. So you want to trade where the big guys are going and not against them. So all our models are built to understand where liquidity is. We can talk about some of our advanced stuff, maybe our CTAs models. So basically, if you know where the big guys are going, it doesn't mean that the price necessarily will move there now or maybe the next day, but you're basically capturing the sentiment of the market by looking at option data. Nobody knows what the big banks are trading. Nobody knows what the insiders are doing, but the option market can really give us a really good understanding of where the major levels are, the levels that are targets. So think about who buys options is people that are looking for a move. Because think about options have time decay, right? So if the move doesn't happen in the time that you have, then you lose your premium, you lose your money. So if big players are positioning at some key levels, it means that either they have research that tells them that the stock could go to that level, or either they understand that there could be synergies, either they have valuation of potential earnings. So if they believe that NVIDIA has a higher valuation than what it is today, and they might want to position to more further out strikes because they want to pay less premium. And then, of course, you need to understand the volatility, right? So everybody wants to trade options, but the biggest mistake is trading against volatility, right? So you cannot buy option when volatility is high because you're going to just lose money, even if the price moves in your direction. And you need to understand how to look at that. And then you need to understand your risk reward. So if let's look at the ATR of NQ is skyrocketing and you have a 10-point stop, then trading NQ does not make a lot of sense because
exactly you're not. Yeah, you're going to get slopped. You're going to get stopped out.
So I think those are the biggest key points, and you can look at those data by looking at the option data, by looking at the different models that we provide.
Excellent. Thanks for having me on the show.
Thank you. And I love having you. And we're going to be back in a couple of weeks, guys. So please stay tuned. And so next step, we're going to run a morning routine. Maybe we start from the scan. We look at some interesting asset, and then we just play out how you would do your analysis.
I would love that. That would be awesome.
Awesome. Thank you so much, Anne-Marie, and thank you guys for watching. And obviously, we have our Memorial Day sale. So if you guys want to join us, just go on MenthorQ.com, and you'll find all the information that you need to sign up. And hope to see you guys there. Thank you.